Mrinalini Krishna joins us on the phone line. She tracks the Finance Ministry very closely. Mrinalini, thanks for joining us on the show. Tell us, what are you gathering from the Finance Ministry? We just got some flashes moments ago where Finance Ministry has reiterated the point that these are not capital control measures. These may be very, corporate specific measures as well. People who really want to go and buy assets abroad could be taken up on a case-to-case basis. However, they reiterated the point that bulk of this worries right now and the pressure on the rupee is due to global factors. What else are you gathering there?
Well, absolutely. What Finance Ministry sources are saying that, inflation data as well as employment data in the US is something that has perhaps sparked off fear again that the QE tapering off may start a little earlier than expected, and which is why we've seen mayhem in the markets across the globe today. The point the Finance Ministry is stressing here is that rupee has an impact on equity markets have an impact on the rupee, and it could potentially be a vicious cycle, but it could work the other way around also. And the measures that they've taken are not capital controls. It's continuously Finance Ministry is reiterating that, and they're saying that it's a part of the package. On one hand, you're trying to attract inflows. On the other hand, you will obviously try and restrict outflows as well, making it absolutely very clear that even though there have been some amount of restrictions that have been put on overseas investments, it's not that there is going to be no investment allowed at all. It can all go through the approval route. Another important point being mentioned here was, of course, the fact that it's these measures of putting curbs on the net worth limits is also because of the stressed corporate balance sheets that we've seen in India. So all of these measures are not capital control. Is something that they're reiterating again and again. And another important point mentioned was the fact that arresting the fall of the rupee at any cost is not the mandate for the government, because it's very easy to do so by choking liquidity, but that will come at the cost of growth, and something that the Finance Ministry at this point in time is not looking to do. There are restrictions being placed because there is, of course, they want to curb the volatility in the forex market, but they're not looking at any levels. They believe that they are prepared to live with changes, orderly changes in the currency market as long as it's fundamental driven. They continue to believe that the rupee will find its own measures, and these measures that have been taken are just to curb down volatility. It's not capital control. They're not trying to restrict anybody from investing abroad. It's just that instead of the automatic rules, the investments will now go through the approval route.